Getting married could save you $47,000 in taxes over your lifetime, or it could cost you an extra $12,000 per year. The difference? Three specific financial decisions most same sex couples don't even know they need to make before saying, I do. I'm going to show you the exact math behind the marriage bonus versus the marriage penalty, the one Social Security strategy that could add $500,000 to your retirement, and the three legal documents you still need even after you're legally married. Because here's what nobody tells you. Marriage equality gave us the ring, but it didn't give us equal financial protection. By the end of this video, you're going to know three critical things. First, the tax calculator that'll tell you in 60 seconds whether marriage will save you money or cost you thousands, and why same-sex couples face this penalty more often than straight couples. Second, the Social Security spousal benefit that's worth up to $500,000, but only if you time your marriage correctly. Get this wrong by even 1 month, and you could lose 6 figures. And third, the estate planning mistake I see constantly, even from married couples who think they're protected. This one oversight could mean your spouse gets nothing if something happens to you, despite having a marriage license. Let's get into it. Here's something that'll blow your mind. Before 2015, same-sex couples actually had some financial advantages over married straight couples. Yeah, you heard that right. When the federal government didn't recognize our marriages, we could each max out our own retirement accounts without hitting the joint income limits that married couples faced. We could gift each other up to $14,000 a year tax-free without it counting as a marital gift. And weirdly, some couples in high tax rates actually paid less in federal taxes filing separately. But here's the thing, and this is important. Those advantages came at a devastating cost. You couldn't share health insurance. If your partner died, you got hit with estate taxes that could wipe out everything you'd built together. Social Security survivor benefits? Forget it. You got nothing, even after 40 years together. Then, June 26, 2015 happened. Obergefell versus Hodges. Marriage equality became the law of the land, and overnight, everything changed. Suddenly, we had access to over 1,100 federal benefits and protections tied to marriage. We could finally file joint tax returns, share health insurance, claim Social Security spousal benefits, all the financial infrastructure straight couples had taken for granted for decades. But here's what the champagne toasts and pride parades didn't tell you. Getting legally married doesn't automatically make your finances better. In fact, for about 35% of same-sex couples, getting married actually costs money in the short term. That's not because marriage equality was bad. It was one of the most important civil rights victories of our lifetime. But marriage is a financial contract as much as it is a romantic commitment. And just like you wouldn't sign a business contract without reading the fine print, you shouldn't get married without understanding exactly what you're signing up for financially. So that's what this video is about. Not whether you should get married, that's between you and your partner. But if you are considering it, I'm going to give you the financial framework to make the smartest decision for your specific situation. Because here's my belief. Love should drive the decision, but money should inform it. The benefits. Why marriage can be a financial windfall. Let's start with the good news, because there's a lot of it. Number 1, the tax benefits, when they apply. If one partner earns significantly more than the other, marriage usually creates what's called a marriage bonus. Here's how it works in 2026. Let's say Alex makes $120,000 a year and Jamie makes $40,000. If they're not married, Alex is in the 24% tax bracket and Jamie's in the 12% bracket. Combined, they're paying about $27,000 in federal taxes. But if they get married and file jointly, their combined $160,000 income puts them in the 22% bracket for most of that income, and they pay about $25,000 total. That's a $2,000 annual savings, or $47,000 over a 30-year marriage. The key factor: the bigger the income gap between partners, the bigger the marriage bonus. If one of you makes double or triple what the other makes, marriage is almost always a tax win. Number 2, Social Security, the $500,000 benefit. This is the big one that nobody talks about, and it's massive for same-sex couples. If you're married, the lower-earning spouse can claim up to 50% of the higher earner's Social Security benefit, even if they never worked or paid into the system themselves. Here's the math. Let's say Taylor worked their whole career and will get $3,500 per month in Social Security at full retirement age. That's $42,000 a year. Their spouse Jordan only worked part-time and would only qualify for $800 a month on their own record, $9,600 a year. But because they're married, Jordan can claim the spousal benefit instead. 50% of Taylor's amount, which is $1,750 per month or $21,000 per year. Over a 25-year retirement, that's an extra $280,000. And when Taylor dies, Jordan steps up to the full survivor benefit of $42,000 per year for the rest of their life. Potentially another $200,000 plus over the years. Total value, $480,000, all because of a marriage license. But here's the catch. You only get this if you've been married for at least 1 year before claiming benefits. So if you're planning to retire at 67, you need to be married by 66. Miss that deadline and you lose this benefit entirely for that first year, and potentially forever if timing doesn't work out. Number 3. Estate planning gets infinitely easier. When you're not married, leaving assets to your partner can trigger estate taxes. In 2026, the federal estate tax exemption is $15 million per person, which sounds like a lot until you factor in retirement accounts, home equity, and life insurance. But here's the magic. Married couples get an unlimited marital deduction. You can leave your spouse $50 million and they won't owe a penny in federal estate tax. Plus, with portability, you can transfer your unused estate tax exemption to your surviving spouse, essentially doubling their protection to $30 million. For unmarried couples, you're each on your own $15 million limit, and anything above that gets taxed at 40%. That's potentially a $5.2 million tax bill on a $28 million estate that a married couple would pass tax-free. Number 4. Health insurance sharing. If one partner has great employer-sponsored health insurance and the other doesn't, marriage opens the door to spousal coverage. This is especially huge if one of you is self-employed or works for a small company with terrible benefits. But check this. Some employers offer domestic partner benefits even without marriage. So if you're on your partner's insurance now as a domestic partner, getting married might not change anything, but it makes it legally guaranteed under federal law with ERISA protections. And number 5, the emotional ROI. Look, we can't put a dollar amount on this, but it matters. For many couples, the legal recognition of marriage provides profound emotional and psychological security. Knowing you're next of kin by default, that hospitals can't question your right to be there, that 1,100 plus federal laws recognize your relationship, that's worth something intangible but real. The costs, when marriage hurts your bottom line. Now here's the part most people don't talk about, when marriage actually costs you money. Number 1, the marriage penalty. If both partners earn similar high incomes, you can hit what's called the marriage penalty. Here's why. In 2026, the 35% tax bracket starts at $256,226 for single filers. So if Morgan and Casey each make $400,000, they're both in the 35% bracket as individuals. Total income, $800,000. Total taxes, about $238,000 combined. But if they get married? The 37% bracket for married couples starts at $768,700. That means $31,000 of their income gets taxed at 37% instead of 35%. Plus, the way the brackets stack up, they're paying closer to $246,000 in taxes, an $8,000 marriage penalty every year. And it gets worse at higher incomes. If they each made $500,000, $1 million combined, the penalty jumps to around $15,000 per year. Who gets hit hardest? Dual-income professional couples where both partners earn well into six figures. If you're both doctors, lawyers, tech executives, high-earning consultants, marriage can cost you thousands annually. This is why I mentioned that 60-second calculator earlier. Google Marriage Tax Calculator 2026 and plug in both your incomes. It'll tell you immediately whether you'd get a bonus or penalty. Do this before you propose. Number 2, student loan repayment nightmares. If either of you is on an income-driven repayment plan for student loans, getting married can be a financial disaster. Here's why. Most income-driven plans, like IBR or PAYE, calculate your monthly payment based on your household income. So if you're making $50,000 and paying $200 a month, but then you marry someone making $150,000, your payment could jump to $1,200 a month overnight, even though your spouse has no legal obligation to pay your loans. The workaround. File your taxes as married filing separately, so your payment calculation only counts your individual income. But here's the catch. MFS disqualifies you from most of those tax benefits we just talked about. You're choosing between lower loan payments or lower taxes. It's a brutal trade-off. Pro tip: if you have significant student loans, run the numbers both ways with a tax professional before you get married. Sometimes it makes sense to wait until you've paid down more debt. Number 3, loss of means-tested benefits. Getting married combines your incomes for eligibility purposes, which can disqualify you from programs like Medicaid, depending on your state, Affordable Care Act subsidies, SNAP food assistance, and some state housing assistance programs. If one partner has a disability and receives SSI, supplemental security income, getting married can reduce or eliminate those benefits entirely because the calculation now includes both incomes. For couples where one person relies on these safety nets, marriage can mean losing thousands in annual support. In these cases, staying legally unmarried while maintaining a committed partnership might be the financially smarter choice. Number 4, the legal documents you still need. Here's the biggest misconception I see. Couples get married and think, great, we're protected now. Wrong. Marriage does not automatically give you healthcare power of attorney. Your spouse isn't automatically your medical decision maker in all situations. In some states, parents or adult children can override a spouse if there's no explicit directive. Marriage doesn't give you financial power of attorney. If your spouse becomes incapacitated, you might not be able to access their accounts or pay bills without a court-appointed guardianship, which is expensive and slow. And it doesn't give you a living will or advance directive. Your spouse needs to know your end-of-life wishes in writing, especially if your family of origin might challenge them. Even married couples need these documents. Budget $500 to $1,500 to get them done right with an attorney. It's not optional. Let's talk about 3 things that make this decision more complex for us. Number 1, state-by-state variations still matter. Yes, marriage is federally legal, but 27 states still don't have explicit non-discrimination protections for LGBTQ+ people in employment, housing, or public accommodations. What does this mean for marriage? If you live in or move to one of these states, you could be legally married but still face discrimination that impacts your financial stability. Job loss, housing denial, healthcare discrimination. Your marriage certificate doesn't protect you from that. This is part of what I call the safety premium, the extra cost of living in a more accepting area, which often means higher cost of living. Number 2, family of origin conflicts. For many of us, marriage means navigating family dynamics that straight couples don't face. If one partner's family is unsupportive, that can create financial complications. They might contest your estate if your spouse dies. They might challenge medical decisions. They might refuse to provide the family financial safety net, emergency loans, co-signing, that many straight couples rely on. This is why those legal documents I mentioned, especially the estate plan, are even more critical for us. You need to explicitly disinherit unsupportive family members and name your spouse clearly in every document. Number 3, the timing question for older couples. If you're getting married later in life, say in your 50s or 60s, the financial calculation is different. You have less time to benefit from the Social Security spousal benefit. You might already have significant separate assets that you want to protect for children from prior relationships. You might both be high earners where the marriage penalty hurts more. For older couples, I often recommend this. Run the numbers with a financial planner before making a decision. Sometimes the romantic win of marriage comes with a significant financial loss at this life stage, and you need to decide what matters more. So, should you get married? Here's my framework. You should probably get married if one partner earns significantly more. The marriage bonus applies. If you're planning to retire in the next 10 to 20 years, Social Security benefits are huge. If you have significant assets and want simplified estate planning, or if one partner has great health insurance and the other doesn't, you should maybe wait or stay unmarried if you're both high earners with similar incomes. That's marriage penalty territory. If one of you has significant student debt on an income-driven plan, if either of you relies on means-tested benefits like SSI or Medicaid, or if you're both in your 60s plus with complicated existing estates and the math doesn't work. And regardless of what you decide, you need a will, both of you. healthcare and financial powers of attorney, beneficiary designations on all accounts, and a clear understanding of the actual financial impact. Now, here's the thing. I mentioned those three critical legal documents you need even after you're married: healthcare power of attorney, financial power of attorney, and a living will. But the truth is, there are actually 9 legal documents every same-sex couple needs to have in place, whether you're married or not. And honestly, most couples don't have even half of them. In my video on the 9 legal documents all same-sex couples need, I walk through exactly what each document does, why you need it, what happens if you don't have it, and how to get them done without spending thousands of dollars. These documents are the difference between your wishes being honored and your family fighting in court while you're unable to speak for yourself. You need to watch that video next. It could literally save your relationship and your assets. I'll see you there.